Good morning, guys. Welcome to this Monday, July 27th. And we have a little bit of a gap up going on here on the overnight, and so far it's been holding on to that gain. Maybe it's because they stopped shooting for a few days, maybe not. It's hard to say, but it was a nice little gap up here at the open. So we were down here in the 74.30s. It looks pretty darn miserable going into the weekend. And we had a whole potential forecast for even worse action, and it turned out to be no action. And the market gapped up today, or going into today's trading. We'll see what happens. It's too many uh, moving targets, if you wish to to figure out what's going on with us. We just react to what we see and trade it accordingly. Now, I just saw your little note there about the CME launches these single stock futures. Yeah, it's I saw that, and I was just taking that with a grain of salt right now. We'll see how that develops. For me, it's unless there's some specific need or some specific interest in actually trading them, because I get all requests about trading different symbols and stuff like that. If I add them to my data servers, it's something I need to keep maintaining. And just to add them to have someone check him out and then just move on to something else, it's just not very productive. So if there's an actual need for it, or someone actually going to start trading it, or this turns into be a big volume or a big attraction, well, then I'll add some of them. But right now, I'm just kind of watch it and see how the whole thing plays out. That's usually how I approach things. I had these guys I had these people had in mind the micro bond, the ultra bond. Had someone had me add for a bit and promised me to go into all sorts of new business based on that market, and nothing happened. I had the Nikkei and all those guys added those. I took those off. I've been phasing out some symbols which no one really trades. It's a very few or far between people trade. So it's just focusing on the one people actually are trading. Looking at that. So that's the way I'm approaching it. But anyway, back to this stuff. So in the ES gapped up pretty good. We have a pretty good busy week of news ahead of us. So it could be a pretty interesting week. So today we get a fair amount of news. We have durable goods, retail inventories, wholesale inventories, all happening at 8:30. We have Dallas Fed at 10:30, a 2-year auction at 11:30, 5-year auction at 1. So bond auction is always interesting, especially the short terms, since they've been used to fund the debt in the short term, at least under Yellen. You'll see how important they are now. But so we got the 8:30 and 10:30 we have news, and then we have the auctions. On Tuesday, when the Fed meeting starts, the announcement on Wednesday. We also have housing data and consumer confidence coming out on Tuesday. Wednesday, we get the announcement, but you also have, pretty much just the announcement coming out then. Thursday, we got a GDP read. We have a personal income read. That's you see the PCE index in there, inflation read. And then on Friday, we get employment cost and Chicago PMI consumer sentiment. So we got news pretty much every day this week. So definitely it adds to the mix. So we've got that going on. We had the war going on, and we have a ton of earnings coming out this week. A bunch of tech stocks going to report this week as well. So this is going to be probably a little bit of action. Now, looking at the ES, I'm just going to start off the same as I had before, range bound. Given the overnight, maybe start favored alongside to get started. But as you can see in the bigger picture, we are pretty much right smack in the middle here. And it's not really giving us any direction. That's going back and forth in this range. The bigger area is going to be to pay attention to is that 73.50. That one comes out. I think that would be a big change. We have a volume edge potentially going on here at the 74.15, 10 to 15. You see a little volume skew going on down there. Yeah, a nice volume skew up here at the 75.80s, 7600s. But right now, we're pretty much trading in the range. We have a nice attractor up here at the 75.40s. That's maybe where we're going to go here in the day session. But we just going to start trading this as a range-bound market, looking to sell strength, buy weakness fairly equally, see if we get some kind of a directional day. But looking at right now, looking to sell against strengths, 75.20s. 75.30s, 75.50s, 75.60s. Now remember, I told you the 75.40s here. Right between these two, you have a little volume edge. Hard to see. You can see it on the F2, but on the F1, you can see how much volume here right at that 75.40 level. Now remember, that is all aggregated numbers. So it's gonna be most likely here around that 75.50 is where you see probably have most of that volume. So we have a level right there. But if they take out the 75, 50, and 60s, maybe start thinking long side and as a directional trade. On the way down, they're going to buy weakness, 75 10s, 75 hundreds, 74 90s or 80, 74 85s, 74 70s, and then down here at the 74 45, 74 30s for rotations up. But I would say that if they take out this level, 74 70s, I would be a lot more aggressive on the short side, thinking, okay, here we go again, heading lower. So 4 levels down, 4 levels up, I think it's a good starting point. And let's see if this is going to bust out of that range. I think we have a potential direction going. So initially looking to buy against that 75, 75 5 to 10, 74 or 75 hundreds, 74 85 to 90, 74 70s for rotations and back up again. And then looking for short setups against 75 20, 75 30 35s, 75 50s, 75 60s rotations back down again. Above 60s may have a directional move going. So that's the way I would approach it. Fairly straightforward, fairly range bound. As you can see we've taken a couple of legs lower. It's been kind of sloppy trading, whipsawing back and forth a bit based on headlines. I mean, last week the Google and Tesla earnings caught a big rundown. Tesla dropped like on the 400s to the low 300s, $100 down. Big move on Tesla. That hurt, but it's volatility. That's what happens. They run things down like that. So it'd be a buying opportunity for Tesla down there. To be honest with you. But anyway, looking at the Nasdaq. So Nasdaq, they were down here all the way down here at the 28,200s on Friday. They bounced, they gapped up, they traded higher. They're back up in this middle range again, way below that 29,300s. So we're still in a pretty weak position when it comes to the Nasdaq. Now, given the overnight, probably start with a slight bias to the upside, but I would watch these levels down here, the 28,500s. If that comes out, I would be a lot more aggressive on the short side. You have a big chunk here, the 4 to 500 support area. If that whole area comes back out again, so the lower end of that is 400s. So you have these levels down here. So from this lower support area up to the 500, these three support areas. If they come out, bets are off. We are back in a really bad spot again. But we are down there. I mean, it's not like that. This could be as a dead cat bounce going on the Nasdaq. But even the bounce, though, we want to start with a slight bias to the upside just to see if they can extend it to the upside a bit. If not, that's going to head back to the short side here if they start failing on us. So Nasdaq definitely that's the one which seems to be driving it right now. So looking to buy weakness with a bit of caution against that 650s, against the 600s, 530s, 470s down to the 420s for rotations up. Looking for short setups against resistance, 730s, 770s, 830s up to this 880s for rotations down. I think if they start taking out this edge, pretty good edge here at the 770s, also the session highs, I think we may have a shot at retracing a bit. So I may want to lean in on the long side a little bit there. Could be a nice little run up here just to squeeze that weak short, or maybe just see how far they can take it. But I'm as I said, I mean, with the Nasdaq down where it's at, I mean, compare the ES, right? This is your ES capital flow. I mean, yeah, this is the ES capital. It's a big blob, and they are trading right smack in the middle. So that's your ES, very range bound. Nasdaq, that whole blurb of activity is way up here, and we are way below it. So Nasdaq a lot weaker when it comes to where they're at, and they're getting hammered because all this big stock by all these chip stocks and stuff. It's all the runs has been happening in the Nasdaq. So as that money flows around, moves, these companies getting hammered. But then again, it's money. Money's not leaving the market; it's just moving around in the market. That's why some are way down, some are way up. Just how it goes. In a market like that, you almost have to start thinking about taking profit a little bit more aggressively. I've been holding on a little bit on some stocks you kind of hold on to instead of trying to trade them. Trading them, it could be also one of these things which gives you you just churn your account because finding the tops and bottoms are pretty hard. But if you have a stock which has gone up a few 100%, it'd be worth taking some profit. Anyway, so on the Nasdaq, starting with a slight bias to the upside, just to see if they can extend to the upside. But Nasdaq, I'll switch to the short side fairly quick. So on the Nasdaq, looking to buy against that 650s, the 590s down to that the 530s. If they start heading below 530s, I'm going to start thinking short side. Still looking to buy against that 470 and 420, but I'm going to start thinking short side of the market at that point and see how they want to run it. So let's see if this little bounce has any legs or not. It's going to be the big question for today. Now, looking at the bonds. The bonds back up a bit. We'll take it. They were down here. They were down here. They ran the stops below that edge. And they bouncing a little bit, a couple of days to the upside. Let's see if they can make that, or make a go out of that. But again, this could also be as a dead cat bounce of the lows. And the bonds hasn't really fallen apart in a big way. You can see how they've been grinding this lower, like a slow grind to the downside, down to support, and then some. And now they're trading back up again. So we have a few auctions coming out this week. We have a 5-year or 7-year. We have a 2-year, all happening early in the week. So all that stuff is probably built in part of this movements of how the yields are moving. But the yields moving down a little bit, prices coming up a little bit. That's not a bad sign. The question is just if that's going to hold or not, or if it's going to be the yields are going to keep going higher and the bond prices are going to keep going lower. Right now, it looks to me like unless they can hold this, they can break this support there and head lower. But we'll see. Had to be cautious trading the bonds. It's a very deliberate market, if you wish. You have to just trade that with a bit of caution. But I would just stay range bound. I would favor the long side to get started. So I would look to buy against that 11 or 110.04, 109.30s for rotations up. Below the 109.30s, I'm back on the short side again. But looking to buy against those to support areas for rotations up. And potential short setups against the 110.16 and 110.20s for rotations back down again. So that's the way I'm looking at the bonds to get started. Cryptos, nothing much on the cryptos going on right now. Kind of hoping that this Clarity Act is going to get some legs, something's going to go there, maybe get some action. But they were up a little bit on the cryptos. They're back down again here in the morning. Ethereum is up to 1950. That's a good sign. So it looks like they're trying to trade higher ahead of this Clarity Act news. It has not been easy by any means. These guys are under pressure for sure. Silver down here to 59. Gold at 4,080. They're pretty much churning around those areas of 58 to 60 something on silver. Gold in the 4,000, between 4,000 and 4,100. Back and forth they go. Oil back down again to 84. All right, so that's because they stopped shooting a bit. We'll see. I mean, maybe they went through all the remaining targets now, and they're trying to give it a little bit of room. Who knows? We'll find out here, but not making any predictions on that. That's going to be going on until it's done. The only thing you can look for there is headlines and potential escalation or stuff like that. What may be coming. But this week is pretty interesting. So today we start off range bound. We're going to keep starting off most likely range bound until we see some good directional moves going. But I would look at this as if I go back here, this week of news. So durable goods in about 10 minutes, durable retail and wholesale inventories. Then we have Dallas Fed at 10:30. Tomorrow we had a Fed meeting with an announcement on Wednesday, and we got some stuff going on this week. Alrighty, guys, we'll wrap it there. So we have a starting point, and then let's see if what kind of day we're gonna get. Alright, guys, we'll wrap it there. I'll see you back at 11:30 for the next update. Alrighty, guys, later.